Talking about some of the things to be thinking about if you're looking at making that transition over to a retirement care community. And a lot of the things that we're talking about as we go through kind of these 8 different things to be thinking about really do apply to any big financial decision as a whole. So not just if you are sort of in the market to be making that kind of a transition, but in the market to be making any big life transition. We started out the list before the break. First one, obviously, is to get an understanding of what your current financial picture is, right? What you own, what you owe, how much money's coming in, what the expenses are coming out. And then we shifted over to making sure that you understand the costs, the services of that particular retirement care facility that you're looking at doing, because they can vary very widely in terms of what those costs cover and in terms of how the cost structure is made up, whether there's a big entry fee or a monthly fee or whatever the case may be. It's important to get all of that in writing, much like any other big financial purchase. This, at the end of the day, is a big financial purchase that you're thinking about doing. And then to continue on with the conversation, obviously important to make sure that you know what the numbers are. And effectively, that always involves sort of creating a new budget that will reflect what things are going to be once you make that transition over to a retirement care community. Because oftentimes the monthly fee will include things like meals. It'll include things like your cable or your internet or those kinds of things. Some of them even include transportation. So maybe that means you don't need a car like you used to. But those are some of the important things to be thinking about. And then also on the flip side, if you're moving out of your home, well, then you don't have to worry about home maintenance anymore. You don't have to worry about your insurance costs, your real estate taxes, all of those kinds of things. Those expenses go away. So it's important to kind of understand how much this is going to change in terms of what that overall budget looks like, because some of the costs are going to be new and be new costs to you in terms of their impact on you on a monthly basis. But others are going to be costs that go away because, and this gets us kind of to the next point to think about when you're thinking about moving into a retirement care community. More often than not, that means selling your house. And so that is a big change in what that overall financial picture looks like. First, because if you sell your house, then all of a sudden the bricks turned into usable cash that you can have to meet expenses and the like going forward. So that's number one. Number two is that you no longer have the expenses of owning a home. And number three, which is even more important, is that for the most part, when you sell your home, assuming it was your primary residence 2 of the last 5 years, then you can exclude pretty much the entire amount of the gain, or up to $500,000 as a married couple, $250,000 as an individual. But that's a lot of the gain that you can exclude from the sale of a house that ultimately makes those proceeds, that money that you get by converting those bricks to cash, tax-free. Well, if it's tax-free, then now, okay, that's a very different, much more valuable asset in terms of liquidity, in terms of being able to meet financial needs, that is crucially important. And so the notion of sort of using the home, particularly once assuming that you're selling it, it can have a major impact on what the bottom line is going to be on how all of this plays out in terms of what you pay for, what the monthly expenses are, all of those kinds of things. Because there really are some, much like when you sell your house, there's some unique tax strategies that apply, particularly the one that says if it's a primary residence, you can exclude up to $500,000 of gain if you're a married couple. That the reality is that there's also some things to think about when it comes to funding this transition to a retirement care community. And when we think about back to that first item, which is understanding your current financial picture, taking a look at the assets that you have, and the order in which you use those assets is going to be crucially important to make sure that you are doing things in as efficient of a manner as you possibly can, because the order in which you use those assets can certainly have a pretty big difference from a tax perspective. So it's not necessarily necessary to say, oh, I've got a bunch of money and I'm just going to use that as the entry fee. But there really may be some strategies that you want to look at in terms of which assets to use as you make this transaction, because it's not necessarily, I mean, there's two parts of the question, right? There's, do I have enough money to do this? And then, but equally as important, the second part is, what's the wise way to kind of make this decision? And so to really think that through, because the reality is, and this kind of gets us to the next point, is that there's some real tax planning opportunities here, because when we think about entry fees for retirement care communities, some of that, or a large chunk of that, can in fact be a medical expense deduction. Now, here's the thing about medical expense deductions. First of all, you got to itemize. Second of all, you got to get above a 7.5% threshold of adjusted gross income in order for those medical expenses to qualify. But if you're paying a $150,000 entry fee or a $100,000 entry fee, then you can certainly get above that threshold pretty quickly. So it's important to ask the question, how much of that entry fee is going to be, I'm going to be able to treat as a medical expense? And for that matter, how much of the monthly fee that I am going to pay is going to be able to be treated as a medical expense as well? Because if you have medical expenses, the thing about medical expenses is that you don't get to carry them over to the next year if you don't get any tax benefit or tax write-off for having medical expenses. Medical expenses, you either write them off on your tax return in the year that you had them, or that's it. There's no carryover of those expenses. So in that year where you're going to potentially have a large deduction, particularly if you paid an entry fee or something like that, well, then that may be a good time to look at, well, maybe I'll take some money out of my retirement account. Maybe I'll take a little bit more out of my fully taxable retirement account, because yes, that does create extra income. But if I've got a larger medical expense to offset it, then you are achieving a very tax-efficient strategy when it comes to making that life transition over to a retirement care community. So it's crucially important that you kind of understand the tax implications and kind of how all of that ultimately plays out, because there's more to it than might meet the eye initially. Similarly, in terms of things that certainly have more to it, and that is your various legal documents. So if you're looking at sort of transitioning to a retirement care community, it's a great time to review those legal documents. And beyond just making sure that you have them and have them in place, it's a great time to reflect on, are these the right people? Maybe when you did those documents a decade or two ago, you named somebody that was a friend or a peer, and the reality is that they've also gotten older just like you, and so you might not want to continue to use them because if their health is not as good as yours, then might not be around to make the health decision that you would like them to make. So it's really important as you go through this particular transition phase, not just to say, okay, I've got the documents, they're in place, everything looks good in that respect, but to really think through, who are the decision makers and what role are they going to serve, or can they serve? Because ultimately that becomes crucially important when it comes to those decisions that need to be made as you get older. And then, of course, lastly, have an understanding of what those future cash needs might be as you get older. And maybe that means you got to transition into assisted living, or maybe that means you got to transition into the nursing home side of things. Make sure you understand what those costs are all going to be. So as with anything, a successful transition in life, whether it be to a retirement care community or not, requires you to really think through your finances, your financial plan, to develop a tax strategy that's going to allow you to do that on a tax-efficient basis, and really to kind of look at your legal documents as well to make sure that the decision that you're making, the move that you're making, is one that can be done with clarity, with confidence, and to put you in the best possible shape. Those are certainly the kinds of things that we're here to talk to individuals about on a daily basis at Nelson Financial Planning. If you think we might be able to assist you make decisions like this and the host of other decisions that we all make in our financial lives on a regular basis, pick up the phone, give us a call at 407-629-6477, or visit our website at nelsonfinancialplanning.com to schedule an absolutely free conversation. This is Joel Garris of Nelson Financial Planning. Enjoy the rest of your day.